Hey, I'm Nicki with Bosley.
And I'm Jake with Mortgage Edge, also known as Mortgage Jake.
I'm a realtor. Jake is a mortgage broker, and today we want to talk a little bit about what happens to people who are self-employed when they decide they want to buy a house and are faced with mortgage challenges. Because this is happening more and more, right? More and more people are self-employed, gig economy, making good money, but showing on their tax returns a very low income for all kinds of reasons, because you can, quite frankly, and that's what we're trying to do, and there are expenses. And I know I'm working with more and more buyers who are self-employed, and they're suddenly faced with challenges when they, especially if they just talk to a traditional lender. They're almost always just shown the door, right? You're not going to get a house. And that's heartbreaking, because especially if you're going, I have all this money, right? I have the money. I save money.
I have cash flow.
I have a down payment. I make enough money. I'm making over $100,000, or my partner and I are making, X amount of money. We should be able to buy a house. Why aren't we allowed to buy a house? Jake, why aren't they allowed to buy a house?
So last week we talked about incorporated people. This week we want to talk about sole proprietors.
Okay.
You're not incorporated, you're still running a business, you're still able to show me a cash flow, and I'll tell you some major pitfalls of why you're not able to buy a house.
Okay.
So either you show enough income to qualify. Well, just like the incorporated people, if you have a 2-year history of net income and you qualify based on that number, ta-da, you're good, here we go, let's buy a place.
But most people, unless
95% of people. When I see a notice of assessment that shows $100,000 for someone who's self-employed, I think to myself, your accountant sucks.
Right. Or they're making
billions
of dollars.
And then they're incorporated.
Right. Yeah, and then they don't.
So you're a sole proprietor, you're a plumber, a carpenter, a graphic designer, you're I can think of
IT people,
IT,
like this, film and television people.
Film and TV, you're all sorts.
Tons.
Exactly. You're getting your income from different clients, different ways. So if you don't qualify using the true 2-year line 150 method, that's your tax return,
Okay.
line 150 net income
I
after
make
taxes.
$80,000 each year.
Exactly. If you don't qualify that way, there are a couple of ways of qualifying you. The best way to qualify you is you have to have at least 10% down, and you state an income that is in line with the field of work that you're in. So let me give you an example of a graphic designer.
Okay.
Graphic designers, on average, can make $75,000 to $90,000 according to the lenders. The lenders think that is a reasonable income to use. If you're a graphic designer, you're running your own shop, and you grossed around $75,000 to $90,000, that's step one. Step two is, how much did you net out of that? If you showed an income of $8,000, $10,000, the spread is too great.
Right.
The lender's going to say, well, how are you going to afford a $500,000 mortgage on an income of $8,000? No, but lender, I make $90,000. The reasonability test is very simple. It's roughly half of what your gross is should be your net. So if you need $90,000 to qualify, you should show around $40,000 to $50,000 net. And that's it. And whether you show that much, and if you don't show it this year, maybe you showed it last year, maybe average it out.
So basically what you're saying is, if people are writing off, somehow reducing their net income to a very low level, they need 2 years of tax returns, so they need to change how they're reporting their taxes.
We need to talk about it. We need to figure out, are you going to pay more in rate or more in CRA taxes?
Okay.
Which one is more important to you?
So let's say that they want to buy a house now, don't want to wait. What else can somebody do though? Because I know there are different ways.
So 10% down is the first entry point.
Okay.
If you have 10% down and it's just not working, we got to get a cosigner. Someone from immediate family to help you cosign until you get to that gap of going on it on your own.
Right. And that might only be, that cosigner might only be on your mortgage for
1
a year,
year,
right.
2 years. We're not talking forever. Not talking 30 years. Just a couple years to bridge the gap. Second option, 20% down. Go to an alternative lender, of which I love working with. Equitable Bank, Home Trust are two of my biggest partners. They don't look at your taxes. They don't care how much you've netted. You've shown $8,000 net income? Great, good for you. If you show a healthy cash flow in your business bank account statements, that's what they're going to use, a percentage of that, because they assume you have expenses.
So what they want to see is money going in, money coming out.
Money going in,
right?
money going out. Exactly.
On a steady basis. And they go, we see a pattern here of income.
Cash flow is king in this situation.
Okay.
Now, I do want to give you a couple of other tips. Get a website if you're a sole proprietor. I know it may sound weird. Get a simple one-page website that tells me what you do and how you make your money. And more importantly, who your clients are. because that will help me show to the lender, here's who Nicki is. She's a graphic designer.
Very
Here's who her
professional.
clients are. Very professional.
She has a website.
She has a website, exactly.
Obviously, she is a professional working
Exactly.
person.
She took the time to find more clients using the web. Second, you must have a business bank account. Now, a lot of clients say, well, I run it under my sole proprietor, my name. The lender doesn't know what's an expense for you at Shoppers Drug Mart and what's an
Right.
expense for you at Staples. They want to see the separation.
So, and I'm going to ask a question about that because a lot of people, I have a business credit card and a personal credit card. Anything to do with my business goes on that credit card.
Absolutely.
Is that enough? Or do you want
They
an
want to
actual
see,
bank?
they want to
separate
see
bank account?
invoices going into business accounts.
Okay.
And then you pay yourself out of that.
Right. Which,
So-
there's a whole book on that, and we'll talk about that of how to make your money work for you better. We'll do that another time because it's an amazing
Yeah.
a mental process that will help also a lot of self-employed people
Perfect.
get the money, get your 10% or your 20%.
Right, right. Yeah, absolutely.
And that's because that's
For
what we
now,
want to work towards.
we want to get you into the best mortgage we possibly can. We just want to work with you, and I want to tell you there are so many options for self-employed people.
Yeah.
Don't feel disheartened. And if it means we got to put on a path of 6 months to a year, then so be it.
Fine.
We'll do it.
It takes that long sometimes to find the house that you want anyway.
Exactly.
So, all right, great. Our contact information is below. Get in touch with us. Let's get started. Let's get you into the home of your dreams. Jake will help you get the money. I'll help you get the house.